morning. Thanks for tuning in. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. Let's take a look at the headlines. Markets begin the trade upon a positive note. The Nifty trades close to the 12,000 mark. RBL Bank and Bharti Infratel are seeing more rise in the open interest, fresh longs seen there, whereas RBL, while Infratel is seeing fresh shorts at this point in time. Reliance Industries is the top gainer on the Nifty. It is contributing to 45 points to the Nifty's upside. Reliance Jio has announced that it will hike tariffs next month. And Britannia is a top loser on the Nifty after Economic Times reported that it has put off its launch of new products.
Okay, so those are your top headlines at this hour. Let's also tell you what's happening with the markets. Well, the focus continues to be around the biggie Reliance Industries, which has touched its lifetime high levels today. In fact, you've also got Nifty reclaiming that psychological mark of 12,000. So Reliance at 1567, it is contributing the most in today's trading session. And yesterday also, it contributed nearly 40 points to the gains that you saw on Nifty. Sensex up about 250 points. Banking index, that's the Nifty Bank, which is trading with gains of about 117 points. Actually, watch out for all-time high levels now, because Nifty is just sub 100 points away from its all-time high level of 12,103. And for the Nifty Bank itself, 31,783 is the all-time high level that we had seen on May 31st. So once again, we will be staring around those record high levels. But in terms of broader markets, you've got the mid-cap and small-cap index. Both of them are trading in the green. But the market breadth actually is just about even Steven. Pull up the Nifty for the entire listed universe. That's the NSE stats for you on your screen. Right now it is in favor of the advances, but you are seeing declines as well. Only FMCG and IT, so your defensives are in the red, but across the board, most of your sectoral indices, be it pharma, PSU banking, and also Nifty Media Index are your top sectoral gainers. Important to then watch out for the levels today, since we've already reclaimed that psychological mark of 12,000. Remember, the recent high on the index is 12,034, which was seen on November 8th, and that's the distribution. We're staring at a very, very tight range, 11,900 now to about 12,000. But so far, considering we've reclaimed that mark, we've not seen any unwinding coming in for the 12,000 call. In fact, it's added about 3.5 lakh shares is what I can see on the exchange website, while put writing continues at 11,900 and the 12,000 put strike too has added about 6.5 lakh shares. So 11,900 should be the support one should watch out today, Agam. And on the upside, 12,034 is the recent high. If we scale past that, then 12,050 should be the another mark to watch out.
Right, absolutely. Also, let's take a look at all those stocks which were in focus on the back of change in open interest, and of course we've spoken about a whole host of your communications company, telecommunications company, which are in focus. But besides that, you have Torrent Pharma, which is looking at a 22% increase in OI, RBL Bank, which is looking at a 17% increase in OI, with longs building in, considering the stock is up nearly 5%. Shree Cement, of course, which is also undertaking a QIP, is looking at a surge in OI, and well, fresh longs there. Long and buying coming in for SRF and Bank of India as well. So some of those stocks are certainly seeing a lot of change in open interest in their respective futures. What about stocks we're seeing unwinding? And again, well, after another 18% up move for Vodafone Idea, it's almost tripled from its recent low. It's looking at some amount of decline in open interest. Castrol India, Apollo Hospitals, and Coal India also looking at declines. But for Vodafone Idea, it seems that shorts which may have taken taken at around 8 rupees, 9 rupees, perhaps even 7 rupees, are now starting to see some amount of covering. So, well, there very well could be more strength in store for Vodafone Idea. You never know. But yes, telecommunications largely is going to what's standing out.
Yep, and interestingly, Agam, I was just checking the data yesterday. Of course, Vodafone Idea, Bharti Airtel, most of these stocks have been witnessing short covering. But on the cash side, for all three, Bharti, Reliance Industries, which surged in last hour, and even for Vodafone Idea, the delivery data was appearing on the higher side. So for all three, it was somewhere in the range of about 35 to 40%, which is giving you an indication that there is cash-based buying also happening for these telcos. Remember, so far, investing community traders were staying away from this pack. Maybe after the tariff hike, which is coming for the first time in the last 3 years, let's see if that calls for any sort of re-rating for the sector or not. But moving on, and the stocks that we will be discussing on the show with our experts, of course, on top of the list is Reliance Industries, which is trading around its all-time high levels, and it's been an outperformer this year. It's up nearly 40%. IndusInd Bank among the private banks is doing good. That stock's trading above 100-day moving average. In fact, it's up for the third straight day. And among the PSUs, HPCL is in focus, where both price as well as open interest action has been witnessed in the opening trade. Daga.
Okay, well, it's time to get our experts in, but before that, here's a reminder. If you have any queries regarding futures and options markets, you can call us on 022454044141, or of course write to us on Twitter, Facebook and YouTube with the AskBQ hashtag. Today we have with us Navneet Daga of Yes Securities and K. Subramanyam of Altamount Capital joining us on the show. Good morning to both of you, and thanks for taking the time out. Navneet, I start with you. Where do we go from here? What is your view on the benchmarks?
Well, good morning, Agam. If you look out at the markets, defining gravity, it's been resilient, and it's showing the resilience. Even if we are seeing some kind of correction in the global markets in the last overnight as well. So it's giving you a sign that basically there's the chances that we will try to attempt that previous high somewhere into 12,100 mark and then try to stabilize. But to my understanding, I am not seeing any major unwinding at a 12,000 call option, which is giving me concern that there is a chances that we become range bound again, getting into that typical band of 11,900 on the lower side for this expiry, and similarly on the higher side 12,100. So to my understanding, the overall trajectory is buy on dips, and looking likely that in the next series we are likely to move about that 12,000 big hurdle zone, and 12,000 and 12,100 zone likely to be taken out of the next series.
Okay. Do you have any strategy then, Navneet, on the index, either on Nifty or on Bank Nifty?
Look, for the current series, that is for November, I believe that there's a chances that we end up in this particular band of 11,800 on the lower side and 12,100. So I'm recommending a short strangle strategy for the monthly expiry. That is on 28th of expiry. We're getting in by selling in 12,100 calls, and simultaneously is selling in 11,800 puts. We are getting an inflow of around 80 to 85 points. I believe that we happen to be likely that there are the greater chances that we happen to be in this particular band in this expiry, and one can keep a strict stop loss if the spread widens towards 125 odd points. That's where if that happens, the breakout on the upper side is likely to be confirmed. So I believe that one can keep a strict stop loss and stay play with this strategy. I'm looking at this entire premium to be pocketed for this for the next 7 days.
Okay, so that's a short strangle for you. It's a strategy employed when one sells an out of the money call and an out of the money put in anticipation of decrease in volatility. And the strategy becomes profitable when volatility decreases, followed by contraction in option premiums. But that said, let's go across to Mr. Subramanyam for his view on the markets. Mr. Subramanyam, good morning. How are you seeing things pan out for the markets, specifically the indices, and how would you employ derivatives here?
Yeah, good morning, Agam. I think we have seen a fair bit of consolidation and the market trying to break past this 11,950, 12,000 condition. And today we have managed to break past that level, and led by a heavyweight Reliance. And my bet is probably will be on the PUC banking pack now. I think that could be the one next to getting ready for the next up move. And keeping that in mind, recommending buying of a 31,500 strike call of the next week, that is I think ending on November 28 thereabouts. That's quoting it around 250, 260, keeping a target of 440, and maybe one could keep a stop loss of 130. So the Bank Nifty could be one which should continue to lead the markets, and I think this 12,000, if we manage to close around these levels for the day, I think chances are high that we will probably see some good amount of consolidation around these levels for the next upside coming about.
Okay, let's see whether the index manages to close above that mark of 12,000 or not. But let's also get you some strategies around the individual stock futures for today. Navneet, what are the stocks that you're recommending in trade?
Look, there is a combination of two longs from my strategy. One is Ramco Siemens. I've seen the stock is showing a lot of resilience amid the entire cement pack. The stock has been holding up ground about the 800 mark and comfortably trading above that. To my understanding, there's a greater chances that one might see a momentum adding up into the stock and see an upward rally towards 840 odd levels. So one can still look to enter into the November futures in the range of 800 to 805 with a small stop loss of 788 on the downside, and can play with an upside bias and play for a target of 840 on the next week or so. The second stock is from a sideways counter is like a Sun Pharma. I've seen a lot of longs getting built up in the pharma counter in the last couple of trading sessions. The greater chances that at least the downside has been capped on the lower side. So to my understanding, Sun Pharma is a safe bet. One can use a covered call kind of a strategy in this one. One can enter into the November futures the current market price of 433 to 434 and simultaneously sell an upper strike call of 450. I'm looking for a target of 455 on the November series itself, and with a small stop loss on the lower side of 422 to protect the downside.
Okay, well, those are just some of the stocks that Navneet is recommending. We're going to get back to Mr. K. Subramanyam, but just in a bit, we just have to address a few issues. So, on that note, let's start by talking about some of the stocks that we want to talk about. And that one, of course, we have to talk about, Vodafone Idea, and because that one is up another 18-19% in today's day of trade. And, of course, many may suggest to perhaps keep away from a stock like this, considering the kind of wild swings the stock has been used to of late. But Navneet, any view here? Would you recommend taking any position here, or you would want to avoid at this point?
Look, there's been a lot of news flow driven movement that we are seeing. To my understanding, it would be very difficult to pinpoint a level whereby to entry. But somewhat it's looking likely that after this big news flow driven, somewhat the major downfall has been arrested, and somewhat to my understanding, there has been across the board unwinding on the calls that we have seen from almost 5 odd levels to 7. So one can look at buying and call options rather than directly buying a future at this levels. So I would suggest that if somebody is comfortable, one can still punt on for the December series and look for an buying and call options on OTM call options. That can be a good fruitful strategy. One can leave you of time value as well as the time to play on the upside. That would be a better strategy rather than entering into the futures at this market price.
Okay, well, that should also answer Deepak Kumar's query on Vodafone Idea. Remember, post the earnings, the stock had touched the levels of 2.5, and from thereabouts, now it's trading northwards of 7. And in case if you want to take a punt, as Navneet rightly put it across, it can be risky. It will be a punt if you take any exposure to Vodafone Idea. You can look at stock options instead of taking position into future space. All right, the next one is Reliance Industries, and we have been discussing telecom stocks because they have been in focus after all the three players have announced that they will be looking at tariff hikes. So Reliance Industries, and Navneet, coming back to you, the stock's been trading around its all-time high levels, and if I look at the options activity now, there is a lot of put writing now, which is coming across 1540, 1560 strike, and now 1600 is the next level according to options data, which the traders will be watching out for. But looking at the move yesterday, today, what should be the ideal strategy, let's say for somebody who's already holding longs, or if somebody wants to take a fresh exposure here?
Okay, so to my understanding, I will answer in the two parts. Somebody who's already holding on longs, that's a kind of a stock which is into an uncharted territory and seen as kind of a gravity with the kind of a heavyweight it is. To my understanding, it's a greater chances, and one should keep on moving the stop losses higher rather than chasing a level on the upside, because you don't know where the stock will halt the rally, because the kind of uncharted territory it's in. So to my understanding, I'll just keep on moving the stop loss, and somewhere in the levels of 1520 would be now my positional stop loss. Until unless it's now breaking below that level, one should keep on continuing holding on to the longs and keep on trailing the stop losses higher as the stock prices move up. Simultaneously, if somebody is looking for an entry at this point of time, use a covered call kind of a strategy. Again, buying at 1560 and simultaneously selling a 1600 calls for the next series can be a good strategy to my understanding. The greater chances are until unless it sustains the momentum above that 1520, 1500 mark, the upside momentum or the trajectory likely to continue, and it can surprise as high as somewhere near to 1650 odd levels on the upper side.
Okay, well, that's your view on Reliance Industries. From there on, I think we have Mr. K. Subramanyam back with us here. Mr. Subramanyam, if we could just start by talking about the stocks that are looking interesting to you today.
Yes, Agam. So, as I mentioned, the financials are the ones probably should outperform in the near term. So, keeping that in mind, recommending buying of a 100 strike call of L&T Finance, that's quoting at around 270, 280 for a possible target of 5, and one could keep a stop loss of 2. And Bank of Baroda. Now, the PSU banks have been testing everybody's patience, but I think yesterday we saw some pretty encouraging moves, and it was a pretty broad-based ones. But again, one has to take a near-term call because this momentum seems to fizzle out sooner than later. But I think going to expiry, one could probably buy this 100 strike call of Bank of Baroda, quoting it around 350, keeping a target of 8, and maybe one could keep a stop loss of 2.
Okay, so those are some stock-specific ideas coming your way from Mr. Subramanyam. And talking about the PSUs, among the oil marketing companies, HPCL in today's session has witnessed both price as well as open interest action. The futures will come up on your screen. 8% higher when it comes to OI build-up. The stock's also trading with gains of 2.5%. And the stock in today's trade has crossed its or trading around its 50-day moving average. Mr. Subramanyam, I'm going to come back to you. Any strategy that you would advise on HPCL?
Yeah, Navneet, I think this has seen a decent correction. I mean, all the OMCs were in very good momentum, and the HPCL in particular from 328 thereabouts has come down to levels of 280. So, 280, I think there's a decent correction that we have seen. So, yes, I would be tempted to go long on this counter, and maybe one could take the the futures or the option route. Probably a near-term target of 305 could be well on cards. So, I think a future with a possible stop loss of 278 could be bought. 305 could be the target.
Okay, and from there on we move on to IndusInd Bank. Well, again, a tough one to trade off late, but its currently trades above its 100 daily moving average. It's lost as much as 10% year to date, but well, its third straight days of gains for now, and well, gains coming in reasonably good volumes, at least in the cash markets. Open interest hasn't increased that much, but we are seeing traction in IndusInd Bank. It's up 4.5%, currently at 1,453. That's where its spot price is. Navneet, any ideas about how to go about IndusInd Bank?
Look, it's just on the cusp of it trend line resistance. So to my understanding, there's a chances that it might face this resistance at the levels of 1460 to 1470. It's just near to that zone. So there would be two ways to take the trade. Is basically started to cross about that 1470, 1475 mark. I'll initiate a long. Rather than somebody is holding on longs, I will recommend that one should look to book profit in this range and wait for an entry lower dip and an entry point somewhere in the range of 1380, or there's a greater chances that it might give you that kind of a dip. So it's depending on the kind of a position that one is. I'll look to book profit in this range rather than been chasing at this point of time. Until unless it's give a close above that 1475 odd mark, I'll refrain myself to enter into the fresh position at this levels.
Hey, Navneet, we've also got a query from one of our viewer on IndusInd Bank, and Saurav Sarkar, he's sold 1600, that's out of the money call strike, for the next series, that's the December series, and he wants to know what to do here. What would you advise him to do? He sold 1600 call of December series.
It's far OTM at this point of time. It doesn't look like that the greater chances that the stock might surprise you on the upside. But I said that the kind of a momentum that stock can get only about that 1470 to 1475 odd mark. Once it started to close about that level, we might see a larger momentum started to pick up in the stock. But I would be watchful at that levels. If it started to trade about that, I'll not recommend to basically sell the OTM calls at this point of time on the next series that early. Wait for the closing about that level. If it doesn't close, then it's safe, to my understanding. It's safe to even sell that 1600 call for the December series at this early as well, because it can fetch you a good premium at the start of a series.
Okay, well, we move on to take another query on the Bank Nifty. This question comes from Tamil Selvam. He says that he's bought the 28th November expiry Bank Nifty 31,300 call at 360 and sold the Bank Nifty 31,200 November 21st call at 315. He is expecting the Bank Nifty to Bank Nifty spot to be over 31,300 till tomorrow expiry. What's the way forward here? Okay, well, Mr. Subramanyam, I'll put this query up with you. As far as tomorrow's expiry is concerned, he sold the 31,200 call, and for the next expiry, that is the next week's expiry, he's actually bought the 31,300 call. What's the way forward? What is your view on in terms of the strategy that Tamil has employed?
Well, I think he's clearly betting on the fact that the 31,200 strike call which he has sold for the current week, I think that will the premium will shrink and the volatility. I mean, he's expecting a very range-bound market, so he's trying to capture the premium. I mean, to reduce the cost of the next week's call. I think that's the basic idea. But the momentum seems to indicate something else. So if things go Rory and if we do have a sharp spike coming about, then overall I think he'll still make money, but that risk is always there. So 31,200 might not be the right strike to sell for the current. You could probably opt for maybe a 31,300 or 31,300 itself, or 31,400 strike call of the current week, where where also he can, the odds of capturing the premium will be very high, and he would probably, in the terms of risk reward, will be able to make more money than what ideally he would make in the current strategy.
Okay. Let's move on. That's the view on Bank Nifty strategy. Okay, this is for all our viewers. We're only taking F&O queries here. So Asmita, do write in or do tune in as well around 12:30 p.m. for our Ask PQ show. We'll address both fundamental as well as technical queries there. Meanwhile, SBI, I think Anu has written to us and she's bought the 340 call strike for November series and she wants a view on that one. Navneet, 340 call strike of SBI, currently premium is somewhere about 4 to 4.5 rupees, and the underlying is also trading somewhere about 329, 330 thereabouts. What would you advise her to do? Stay put?
Well, the overall trend, the trajectory is up for the stock. It's been one of the key outperformer in the entire Bank Nifty pack. So to my understanding, one need to keep and hold on to it. The greater chances and started to stay close about the 330 odd mark. It will give you a good fillip on the upside. Still 7 days left for the expiry. So one can stay put and hold on to the strategy. The only caveat is it started to close below 320. One should look to exit it. So I'll keep a watch on the futures levels of 320 to 320 odd. That's where one need to exit, because the time value will also kick in the last peg end of the expiry.
Okay, and we have time to take just one more query. So we're going to take that one. It's on BHEL. And well, the viewer actually, Rahul has just wants to know the levels for BHEL, keeping in mind the December expiry. It's currently at 55. Its spot price as well as December futures price is around 55.25. And seeing some amount of increase in open interest. Mr. Subramanyam, your recommendation on BHEL, if any?
Well, Magam, this counter more often than not flatters to deceive. We have seen this 50-55 band, I think, for the last almost 3 weeks. I think ever since that news break came about the possible divestment and all, and it shot up on one particular day from 48 to 54, and it's just been there. So I would be very difficult to really suggest whether this going forward also, whether we could see this momentum coming about. But he could probably keep a stop loss of maybe 51. So if you do have a breakout, I think rather than holding on to the position, he should ride the momentum. 58 to 60 could be a decent levels to exit. So I think one should take a very short-term view on the counter rather than holding on to it.
Okay, that's BHEL for you, and Torrent Pharma is the other one where a lot of OI buildup has come about just in the first hour of trading. The stock, however, is right now in the red, though it's recovered also from the lower levels. Pull up the futures, yep, 26% higher. There is some news as well. Companies, one of the plant has received a warning letter from a US FDA. Maybe the accumulation on the open interest side could be on account of some fundamental news. But looking at the charts, Navneet, would you advise taking any bet, considering there is a lot of activity around the futures?
Look, looking at the charts is giving me a sign that the stock as a near term has topped out. The 1800 somewhere it has faced a lot of resistance. It has surpassed, it not been able to surpass that levels and attended number of time. So risk rewards are being favorable in terms of being short on the stock. To my understanding, any upside towards that 1800 mark should be capped. And one can still look to be on the short side if somebody has got a positional view. I believe that until unless the 1800 market has not been crossed out, there is a chances that it can see a major downside. Looking at the kind of a short build-up, it's looking likely that there's a chances that on the downside 1600 mark is also possible. So risk rewards are still being favorable to be on the short side on this one.
Okay, we are out of time on this show, so I'm going to take a moment to thank both our experts, well, Navneet and Mr. Subramanyam, for joining us and taking us through their views and solving some of your queries. Don't forget to check our futures and options pages on our website, BloombergQuint.com.
Well, with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching. Stay tuned to Bloomberg Quint for more news and updates.